Hi, I'm Joey Patel, founder of Brllant Consulting. Our Business Insights report took 12 years to develop and perfect. We utilized the data from thousands of exit reviews and combined it with current accounting and business requirements. It analyzes over 1,000 data points in your company, as well as 4 years of your financials to produce a highly accurate 55-page report showing exactly where your company is today, what its valuation could be by resolving value-suppressing items, and the exact roadmap to get there. Let's jump into a quick overview of the report, its key features, and how it uncovers millions of dollars of value for our clients. We are confident we can do the same for you. Brllant Consulting's Insight Report is about 55 pages long and is generated entirely from analyzing your company's data. Included is your financial information, non-financial questionnaire, benchmarking data, as well as add-backs and other significant data points. Since all the deep analytics are done by our proprietary software, we only need about half a day of your time and 4 years of your financials to provide you with a detailed report. Our structure diagram shows how your assets are held and why that might be good or bad for your business from an asset protection, taxation, and wealth creation perspective. We can also insert benchmarking data, comparative sales, and recent transactions to further support comparing your valuation results with other companies in your industry. Once we have reviewed and revised the structure components, we use it to analyze how effective it is in terms of business succession and exit planning, wealth creation, asset protection, and even family succession. Now we are ready to jump into the detailed financial analysis. Starting with the profit and loss and balance sheet, we identify any items in those reports that are add-backs or adjustments. This is to identify business expenses that fall outside of the norm. Perhaps they are one-off or maybe a legal case. They can also be something that's paid to a related party, like rent on a building that's owned by the family that owns the business. Identifying the add-backs, whether positive or negative, provides greater clarity and results in a highly accurate valuation. Often, owners do not pay themselves a market salary, and therefore we need to adjust those numbers to align with industry norms. Once we've finalized the add-backs and adjustments, we then output a detailed analysis of the adjusted financial statements, profit and loss, financial balance sheet, and operating balance sheet. It is highly valuable to incorporate the long-term trend. We take 4 to 5 years of your financial data and examine whether that trend is what buyers, investors, and lenders are looking for. Is it steady, stable, consistent growth, or is it all over the place? Do we have one fantastic year and one very poor year? Is it in decline? Documenting your financial trend is just one of over the 1,000 data points that make up the Business Insight Report. Let's now look at the resulting financial scorecard, which shows a graphical, color-coded, and graded snapshot of your company's financial health. It visually identifies where you're performing well, including the areas of underperformance, and highlights what might be reducing your overall scores. The analysis of break-even points is next. We accurately identify how much revenue your business needs to operate at break-even. A critically important feature is that our software also computes your safety margin. In other words, if there is a drop in your revenue for some reason, how much of a drop can your business withstand before you are in trouble? We then analyze fixed versus variable costs and follow that with cash flow reporting. This provides a detailed review of where your money comes from and where it goes. Revenue to cash analysis. And importantly, from a business buyer, lender, or investor perspective, what's the free cash flow that the business is capable of generating each year? Every buyer will want to know this metric as it relates directly to their return on investment. Sustainable growth and analysis is often overlooked by most exit strategists, but is vitally important when discussing succession and exit planning. It tells us the acceleration rate at which the business can continue to grow without changing the debt-to-equity ratio, raising additional capital, or other outside forces. The rate is a highly important number. Strategically, if you plan to grow your business by 30% a year to get to a valuation you're happy with, then the sustainable growth rate will tell us if that's possible or not. Directly linked to that is the credit risk scorecard, which identifies if you can borrow money if needed as part of your growth strategy. Brllant Consulting's benchmarking analysis allows us to look in and compare your company's performance with others in your industry. Is your company over or underspending in particular categories? What is the revenue generation per person? Is it similar to, less than, or more than your competitors? These are all key identifiers that identify the profit gap between what your company is worth today and what it could be worth by resolving the deficiencies identified in the report. The profit gap is value that can be easily accessed once you have clearly identified the cause and created a roadmap. As we have discussed, too many people, inefficient operating procedures, poorly constructed balance sheets, or perhaps you are not turning over your products or services quickly enough. All of those things directly impact revenues and reduce your overall performance. We then have the non-financial scorecard. In the top right corner, we show you your overall scorecard. Then we break it down into 5 key categories of non-financial performance in your business. These are critically important because they speak to risk. Wherever there is risk, there is a reduction in value. Identifying these risks early and mitigating them will substantially increase your company's value. We do the same sort of analysis through a buyer's, investors, or lender's lens to establish exit readiness. How well prepared is your business for exit or sale? Are there strategic intellectual properties or intangible assets that will add significantly to your value? This leads us to the valuation summary. We analyze the risk exposure of your business in 3 categories: economy, industry, and business, to establish unnecessary risk areas within your business that impact valuation. We feed that data into calculating the weighted average cost of capital to determine what return is necessary to run the business at a level that provides a return over and above the cost of capital. Finally, we get to your business's current valuation. Obviously, an important number to know. What really gets our clients excited is the potential value page. It shows the gap between today's value and what your company could be worth if you make the improvements that the Business Insights Report documents with the roadmap to get there. For the majority of our clients, the gap is always millions of dollars. Having a roadmap that itemizes both the improvements and an implementation plan is the heart of Brllant Consulting's report. By carefully mapping the results from the report, the value potential, and the items we know, which are derived from 12 years of using this systemized process, we consistently show how to maximize your business value and achieve a very successful exit. I look forward to getting on a quick call with you to discuss your company and the value that Brllant Consulting and the Business Insight Report can provide. Thank you.